Welcome to this exclusive workshop for senior citizens on planning your money life post-retirement. I now have the privilege to introduce our speakers for today. Ms. Sucheta Dalal is the founder-trustee of Moneylife Foundation and the managing editor of Moneylife magazine. She is one of the best-known financial journalists in India with over 27 years of experience and has worked with some of India's leading newspapers, including the Times of India, Business Standard, the Economic Times, and Indian Express. Based on her outstanding investigative journalism, she was awarded the Padma Shri in 2006. May I now hand over Ms. Sucheta Dalal to begin the first session.
Good afternoon, everybody. First, let's start with the good news. You know, they say 80 is the new 60, which means at 80 you can become the Prime Minister of India. No need to worry. We have to reorient our thinking. So 60 is not old. Unfortunately, we like 60 to be considered senior citizens. In fact, we are fighting for it so that we pay less taxes. Okay, we are telling the income tax department that you must call us senior citizens at the age of 60. And you know, we're living in times when people want to retire at the age of 40 and 50. So the least that they want to do is get some tax concessions at 60. So 60 is just a state of mind. Dr. Dave was one of the people who came here. We had done a memorandum for senior citizens, and we were quite amused when he said that with some renovation, some teeth fixing, getting new knees, he says these are the golden years of my life. He said, I don't even want to call it silver. Yeah. So and you know, he goes trekking in the Alps. So he got both his knees replaced so that he could go trekking. And I think that is the sort of mind frame in which we want to do this whole session, because the plus side is that you're young at 60. The minus side is that you're probably going to live another 25 years on retirement savings. So you have to really worry about investments. So we redefine seniority, like I said. This is all the so-called senior citizens, 25 to 30 years of living on savings, but having fun, which means that you need enough of money for that phase, because then you're going to be independent and you will be able to utilize your resources well. The bad news, there's plenty of that also. This is, you know, I've started with a really gory slide to take you from one end to another. But this is a survey by The Economist. And this is something which I think all Indians worry about, whatever their age. What is going to happen towards the end of your life when you really need care and maybe you're not in a position to know what is happening. And you look at it, India is the worst, and the worst among most nations in the world in terms of the kind of care and treatment available to you. It's one of the worst countries to die in, is what they say. And the reason for me to, you know, show this slide to you is to say that I told you everyone's young at 60. We need people to fight for a lot of things which are important for senior citizens. I'm going to highlight them as we go along. And we need all of you to join us, because you have to make your voice heard with the government to get tiny changes in regulation, in policy, because they're going to be important for all our lives. And it's a long time, you know, that you're going to be living and wanting those changes, because they affect you and me. The numbers are huge. There are 100 million people who are considered technically senior citizens. There is no proper, all over the world, senior citizens are a very, very rich and powerful group. In America, they are the ones who paid their social security throughout. They are the ones who have the money, and people listen to them. They go and vote. In Europe and in Germany, you know, even after the war, things like rebuilding the opera house was done with the money from senior citizens. And you meet youngsters and they'll tell you, well, those are the rich guys, you know, we are struggling. It's not correct in India, but we are getting there, because increasingly people who are retiring, even from government service, are getting fairly hefty pensions. You are going to be a very, very economically important group, but this importance is going to be recognized only when it is a proper group. Now, in America, they have organizations like the American Association of Retired Persons, which in a country which has 250 million people, 40 million people are members there. Okay, so as one strong, powerful lobby, people say no American president can make a decision relating to senior citizens or make a negative decision without his ratings being affected. Doesn't happen in India, which is why I said you have to get together to make your voice heard, because I think there's a lot that is needed to be done. We also have a whole bunch of senior citizens who have gone through this cycle of low salaries and high taxes. It was a combination, okay, quite deadly, which means that some of them have assets, maybe they are asset rich, but they're cash poor. So that is also a significant chunk among these populations. So new retirees are retiring with fairly good pensions, but those who are in their 70s and later have actually paid the highest taxes and earned the lowest salaries because we were in a closed economy, and they haven't got the benefits of the open economy that we see. Income and savings, as you know, if you're not a government servant where it is, adjusted to inflation, your pensions are also adjusted to inflation. Everybody else goes through wide fluctuations because interest rates, you would have seen in the last 20 years, can really move up and down as much as 5 to 7 basis points. And when FD rates went down as low as 3.5%, it really killed a lot of people who were living on their savings alone. There's fairly desperate situation. They had to suddenly start depending on maybe their children or others to supplement their income. Will that happen? It can happen again. Luckily, the mismanagement of the economy is such that you may have to worry about inflation, but interest rates at the moment look like they're going to remain high. But that's really cold comfort for most of us because, we like to keep our money safe. So if it is in a fixed deposit, it doesn't beat inflation, it's a problem because it means that your corpus is really shrinking. One of the issues that senior citizens have to worry about as they age, and these are several international studies, it is what they call cognitive impairment. And what happens is, you would think with all the experience that we have of what happens in real life, you would be less trusting as you grow older because you've had some hard knocks. Instead, apparently, it makes you more trusting and it makes you more susceptible to a variety of different scams. So one of the things that I say in my session is various red flags where you need to remain alert and avoid trusting people. These are statistics. It's important to know up to 80% of scam victims in the US are above 65. 1 out of every 5 senior citizens I read is a victim of some kind of financial scam. I read before this session that the statistics are virtually the same for India, and a lot of times you get cheated by people who are close to you, family, relatives, people that you can trust. FBI crime reports, again, this is really significant because you need to decide that you can't just trust anyone around. You have to be careful. 75% of murders involve relatives and acquaintances, and assault, it is 60%. So you have to be alert. I'm not saying start distrusting your children and family, but be on your watch. Systematic fraud. Now this is another US survey which says, who are the people that you rely on? Someone told me HDFC, wealth management, personal finance. So half the people who are projecting themselves as experts, they're nothing but product salesmen. I think any of you who have lost money in the last 10 to 12 years know this very well, right? You know from experience that people have sold you insurance policies, people have sold you portfolio management, wealth advisory services. They neither know nor care really what happens to your wealth. 75% of investor portfolios were unsuitable. I mean, we know of cases where child plans have been, sold to senior citizens, saying it's good for your grandchild and you will get some money, also knowing fully well no money is going to come to them. America, numbers are quantified. There are surveys. Like I said, they're a powerful group, so they're constantly looking. In India, we don't have any comparable numbers of what it means and what are the kind of losses that senior citizens have faced. We don't have it. When you talk about cognitive impairment, look at some of the things that happen. This is a story you would have read in the Times of India. It's a doctor, okay? And we keep saying that a doctor is usually more qualified. The smartest people become doctors. And she actually believed somebody, and it's not a small amount, 25 lakhs she gave to a bunch of goons who told her that they will use some chemicals and they're going to, duplicate currency. Okay? I mean, really, we laugh at it, but I have several doctors who come and attend these meetings, and I ask them, how do you think it happens? I think the only answer is this whole business about cognitive impairment, because I can't, as Mr. Bapu Malcolm, who does a session here on will, says that this is fraud. So for a woman to say, I will give you 25 lakhs and you use a chemical and duplicate currency, she's lucky that the police listened to her and they went in search of the guys who were trying to cheat her. But actually she is committing fraud because you're trying to duplicate currency. And she's not aware of it. She's gone to Lonavala. You know, I mean, think about that also. That she could have easily been bumped off. We've heard of a story of these real estate guys. 4 of them went for a party again to Lonavala and nobody came back. So look at how many ways in which this woman is. She's a doctor, so we can't say it doesn't happen to people like you and me. It happens to people who probably are even smarter than you and me. Second, she's endangering her own life. She's not only giving away large chunks of money, she's going to Lonavala, so twice over. She's persuaded into committing an illegal act without knowing that it's illegal. And I just give this to you as an example of what can happen when we talk. I mean, my only explanation for this, we can say greed, okay? But even greed is not reason enough to endanger your own life. So I would think that it's also got to do with impairment. This is another India-related story about how, you know, property disputes so many times affect and hassle senior citizens. So what is the way forward? Okay, we say that key is to avoid losses, because you worry so much about returns, you worry so much about interest rates, savings, and then a large chunk of your money is gone if you get caught or you get hurt by some kind of fraud. So avoid various traps which will make you lose the significant portion of that corpus that you have saved. That has to be your primary focus. At least keep your principles safe and then worry about returns. Focus on financial independence, and then finally think about what you want to do with that money that you've earned and kept. So starting point, who better to listen to than Warren Buffett, legendary investor? Simple statement: if you cannot, investment must be rational. If what they say it sounds irrational, stay away from it. Doesn't matter what the returns. Can't understand it, stay away from it. And believe me, the smartest people in the financial world do this. So people who head insurance companies, people who head mutual funds, when we talk to them one-to-one and ask them, a lot of times when, you know, their people are selling toxic products, we say, do you buy it? Would you buy it? And the surprising answer is their own money is in fixed deposits or some mutual funds. Okay, nothing else. So they will sell derivatives, they'll head a brokerage firm, but their own money is safe and it earns less. So, you know, your goal should be to be able to beat inflation, but even if you can't beat inflation, it's better to keep your corpus safe at any cost rather than do anything that will endanger that. Where do we all put our money? Big chunks of it is in banks, bank fixed deposits. Here we are lucky because 65% of the Indian banking system is still nationalized, which means that the government takes care of you. So it doesn't mean necessarily that they're going to be great. You had United Bank, you had Indian Bank, which had eroded their net worth, but Sarkar was there, so you didn't even have to think about your fixed deposits. So in that way, we are safe. Keep your money with a nationalized bank, you don't have to worry. Private banks, not as safe, but again, history has shown us, not just in India but abroad, that if the bank is large, the country is not going to let it go down. Okay, and so I keep saying, don't worry about SMSs that you get saying run to the ATM and withdraw money. You really can't withdraw, especially if you have big chunks of FDs, you can't do it. So keep the money in a large bank, and remember that even a global trust bank, which was not even as big as the big 5 banks today, was bailed out. They didn't allow it to collapse. So large private banks are safe. Cooperative banks are the most dangerous. So if you have money in a cooperative bank, please get it out, because if you're living on your savings, it is a wrong place to put your money. These are under dual regulation of the RBI and the Registrar of Cooperatives. You know that the registrar is completely politicized, which means that there is virtually no regulation. Nobody is watching what they do. The worst thing is it takes 3 or 4 years after their net worth is eroded before the RBI wakes up and decides that that bank will be shut down. There is a bank shutting down every month. Maybe you don't pay attention to these little press releases. It will be one para tucked away somewhere in a business newspaper. It's our job to track it. We track it. on an average about one a month shuts down, okay? And it takes a long time. So say a rupee cooperative bank, for 6 years we know that there is a problem. It took 6 years before they say that the bank will shut down. And there is only 1 lakh rupees that you get, which means for 6 years the bank is not paying back FDs, but it's in suspended animation, it's in limbo. The RBI will neither shut it nor is it really alive, which means that your 1 lakh, which is guaranteed by the deposit insurer, also doesn't come to you for that period. So I keep saying that if you have a reason, like I have a bank in my building so I don't have to go anywhere, makes sense, you want to keep an account there, ensure that you don't keep more than 1 lakh over there. 1 lakh is protected, but your core corpus should be in large safe banks. The second thing, these days, again, the economy is not doing too well, and every single day we are getting emails from people saying we've invested in X company and Y company and Yash Birla's companies and something else, and all these corporate FDs are not paying returns because these are not like bank FDs. It's every fixed deposit is not the same. They are riskier, and the higher the return, all kinds of finance agents will come and tell you that you're getting 3% more, or you're getting 2.5% more, or you'll get a gift. Remember C.R. Bansali and how many people lost money there? It was only because he was paying 3% more than the market. And we keep saying that high interest rates by a private sector company is something to worry about. Now, I know some of you will say, what about Tata Steel's debentures, which we invested in? That happens once in a while, okay? It's a once in a while rare opportunity. Tata's went and bought Chorus abroad. They needed large chunks of money. They gave you an opportunity like never before. It's never come back. If you get an opportunity like that, take it, but it's once in a blue moon. Don't judge everything else by that standard. Yeah, and keep track of the corporate profitability, because even companies that are seemingly high profile, they just sort of fall off. Look at what happened to Kingfisher. How long did it take before it's the most glamorous company in the market to being a complete dud? Big names like Garware. Yesterday I got a mail from someone who says, I'm 75 and I've invested in Garware nylons. I mean, I didn't even know what to reply to this lady, because that company is dead and gone long ago, and they're not aware. She's actually writing to me saying, why is it that I can't find any information? So you cannot not track your companies. Please remember, if you stop hearing about them, withdraw your money if you made the mistake. But ideally, do not invest in companies like this. Be very, very careful with corporate FDs. Avoid unregulated offers. I'm sure there are a lot of people in this room, as in every other room where you put 50 people, plantation companies. Today we have a Moneylife regular. She's not even very old. She's 40. Wrote to us to say how she had invested in plantation companies. Is there any hope for me? Because SEBI got the powers to go after collective investment schemes 2 days ago. Point is, companies which still exist and are still making money may have some hope, but what is dead and gone 12 years ago, you're going to get nothing. So I told her, maybe you'll have a lottery. You never know if you turn lucky. Go and register a complaint so that it's logged in, but don't have any expectations. If you get something, you're lucky. So no plantation companies, please, no art funds, doesn't matter which bank is selling it to you. ABN AMRO was hard selling Ocean. People have not got their money back. When we were the first to break that story, and people who went through us got as much as 80%, okay? But they were a small fraction. Today in real estate, you're getting incredible offers. Some say 30%, 24%. It just means that the real estate sector is not getting money, is not able to sell flats, is sitting on unsold flats. They want to raise more and more money from the public. So please do not believe in real estate offers. The company may have a regulator, okay? It may be a listed company. But these offers, which are not in the public domain, like FDs, are not regulated by anyone. There are a lot of these. If you hear of somebody offering you some incredible returns in real estate and you know that the company is listed, by all means bring it to our attention or go and file a complaint with SEBI. You should draw the regulator's attention to it, but those are dangerous investments, right? Some small tips. The biggest threat these days is bank relationship managers. You know, come back to this whole cognitive impairment thing. They come to you and persuade you to buy all kinds of things. They are the ones who persuade you to take portfolio management service, wealth advisories, insurance that you don't need. These are people that you need to watch out for. Their job function is to get money out of you and, you know, earn a certain amount of commission for the bank. So they don't intend to cheat you. If they don't get it for 3 months, they lose their job. So don't believe in the uncle I know what is best for you stories. Half of them don't know. They've been told to go and sell certain things and they are hard selling this to you. Store mobile numbers, emails. If you deal with a relationship manager, he sweet talks you into buying something, put it down in writing in an email, get him to sign it and get a confirmation. Build a paper trail right in the beginning. Send an email. Even if you don't get a reply, the banking ombudsman considers that proof enough. So if they have not replied to you, suppose they promised you a 36% return on something and you send him a mail saying, as I understand, these are the things that you promised me, please confirm. He may not confirm it. But that letter that you have written to him, you can use if you file a case with the banking ombudsman, and 99% of all banks will not challenge it, right? The second thing that you need to know is relationship managers change their jobs all the time. So you need to have the numbers of 2 people, 2 levels above them. Ideally, for your safety, get his boss and his boss's boss. Until you sign on to an investment, they're ready to share all the numbers. Once you're a customer, you will not get anything. So you must get those details before, because even if the guy leaves, you know who you're going to talk to. When you send emails, mark all 3 of them. Register your mobile numbers. As you know, these days with all kinds of debit card frauds happening, cloning of cards happening, if money is debited from your account, at least you get an SMS immediately. These days banks have started charging a small amount of money. We are fighting it as an organization because we have said that this is a safety device. Banks can't make money on it, but it's going to be a long battle with the RBI. We have lodged a protest, but I would say 60 rupees a year is still not too bad. Even then, even if you have to pay that 60 rupees, get those alerts. It's more important. The next is an example of how they cheat. Okay, now this is somebody called Mangelal Sharma. It's a really heartwarming story. We wrote about it. He's 79. He banked with IndusInd Bank. The bank managers came home, told him, Uncle, bahut acha scheme hai. I think you must take it. You've got your money in FDs. This is a bank FD which is branded. It is called Development of Your Wealth Scheme. Why don't you put the money here? You'll get a higher return. So he says, okay, if it's as safe as an FD and you're sure it's a bank scheme, they say yes. They bring him the form, they tell him sign here, Uncle hum bhar denge, don't worry, main hu now. Then they tell him, write on the check DWS, okay, the rest we will fill. So he was careful, it's not that he didn't do it. He wrote DWS and so they can't put in something else. And he let them do the rest of it. He put 7 lakhs. When he got the next month's statement, he realized that sold him a Deutsche Bank mutual fund with a 5-year lock-in. So his question was simple: at 79, when my wife needs a knee operation, why would I lock my money up for 5 years? So he says, you just lied to me. He went to the bank, they wouldn't listen. Then they sort of admitted that they said they had targets. They told him he can fight. He went and filed a complaint with the banking ombudsman. The banking ombudsman said, did you sign on the dotted line or not? He had. Okay. So they said they threw out his complaint. Now, what did he do? He said, I'm not going to let you guys go. So he printed a t-shirt with his photograph there, as you can see. On the top it says, IndusInd Bank cheated me, they will cheat you too. And this man is a yoga teacher, okay? So it's full of beans. Started going to the bank every day wearing that t-shirt. This is what he's doing, okay? And he would stand there and he would sing and he would dance so that people, look at him. And everybody could see that t-shirt. We got to know about this and we wrote about the scheme. We even had one of our colleagues going to the bank. They tried to intimidate him, but we were there. And then we spoke to the RBI. The next evening, we managed to make so much of a noise, especially on social media. We put it out on Twitter and Facebook, and it kept getting circulated over the place. The next day evening at 11 o'clock, the same 2 managers, so late in the night, went to his house with a demand draft and returned his money. Okay, so I mean, sometimes you have to do something unconventional, which attracts attention, not just of the bank but the media, but it works. I'm going to a different segment now, which is insurance. Insurance is something that everybody who is above 60 worries about, okay? You also know that when you try and get insurance, you know how much more it costs you, because the minute it's like your birthday is a big signal.
You said it is dangerous to put FDs in the cooperative banks, right?
Cooperative.
Cooperative bank. What I'm saying is it safe to put in multi-state scheduled bank? There's something called
Cooperative banks only, right? Multi-state scheduled cooperative banks.
Yeah.
Okay, see, there are couple...
What are the two distinctions between these two, cooperative bank and the multi-state cooperative bank?
Even if they're multi-state, they're not as regulated as the nationalized banks, okay? But like people say two examples in Maharashtra would be Shamrao Vittal Bank and Saraswat Bank.
Yeah.
They are huge, okay? So they are safe. And I mean, I don't want to get into these distinctions because I can name only two, right? And they are safe. I mean, I'm standing here and saying it, I will have to shout from the rooftops, and if at that time you haven't heard me, if something goes wrong, you will say, but that year you stood and said. So I keep a blanket. Cooperative banks are dangerous because they are also as political. They are run well, as it happens. Saraswat Bank is headed by somebody who is an ex-SBI person, and at this point of time, they're big, they're well run. I think a couple of other states also have some 3-4 names you will come across in the country, but you put them all together, all over India, you will not get more than 12. So I would suggest avoid it if you can, or keep smaller amounts of money. Don't make that your primary bank.
There is 5 private banks you're talking about. There are 5.
No. I'm saying any private banks, the large private banks. See, why am I saying large and small? Because you have ICICI, HDFC, these are the big banks, right? You also have the old private banks like Lord Krishna and others which existed, which were not nationalized. So they are neither cooperative, they are tiny private banks. So I'm not saying those are safe. I'm saying the new private banks which were sort of allowed about 20 years ago, those are the more safer ones. Most of them are larger than some of the nationalized banks and more profitable. So insurance versus investment. Insurance is not investment, though every wealth manager and relationship manager will tell you get high returns there, you get investment as well as insurance, so it's doubly safe. It is not. We keep saying keep the two completely separate. You want insurance, buy insurance. Even if you don't make a claim, the premium is not wasted. And the idea that a premium is wasted also comes from the same agents and relationship managers, because they like to make you believe that if you take a plain vanilla term insurance, waste ho gaya. It's not. That's why you should take equity linked. All equity linked products have huge charges. We have written about 18 cover stories on this. I mean, we've now run a free insurance helpline. So please take advantage of it. You're stuck with the wrong insurance. All you need to do is become a member of Moneylife Foundation, which is free. You've got the form in your envelope, and take advantage. We've just started this 2 months ago, and we're getting like 6 queries a day, and we managed to save a lot of people money through this AB Capital, which told people that they're going to get interest-free loans, and I think we helped about 12 people get their money back. Finally, yesterday, Reliance has actually announced that they're going to, take this up at a more serious level. I think they've done this only because we complained to IRDA and said that, what is this? If we are getting so many complaints, what are you doing about AB Capital? So take advantage of this helpline. Please remember, investor beware is what they tell you. Again, it's not a concept that we agree with, because we feel that you can't sell a toxic product and say read the fine print and you need to understand. Because in Moneylife, our view is that you cannot sell a wrong product and allow the regulator to clear it and take no responsibility. Somebody, if we are paying a regulator, if they have this fancy building in Bandra Kurla complex with 600 employees, they have to take some responsibility for what is marketed to you. So our belief in Moneylife and our campaign over the long run is to say that you cannot sell toxic products to people. But insurance is the opposite of that, because when you buy the insurance, nobody has to worry. You are paying the money. you're going to keep paying the money. The day you make a claim, that's the day they're going to use a magnifying glass and start looking at whether you declared everything correctly or not. Till then, they're taking you as this real gentleman, utmost good faith. You filled your date of birth correctly. You told them if you had diabetes. You've told them if they have a bypass. They will look at it only the day they have to make a claim, which is why you have so many rejections. But people don't understand this. A lot of people say, "Maine insurance kar liya." Has no meaning, because if you're not going to get the money, it is all your money gone down the drain, right? So, and especially ignore agents who tell you, don't worry, date of birth, chota mistake hai. No, even if it's a small mistake, you've forgotten to say something, you've forgotten to mention hypertension, they will extrapolate that to say all your future problems and diseases happen because of that and use it to reject your claims. This is a story. I mean, when I say that why we believe in insurance so much at a certain age, this is a man who's a ticket checker from Sholapur. Retired, got a little nest egg. He has 2 wives and half a dozen children. He decided that he needs to provide for them, okay? He's literate, as in he had a government job, but you could as good as call him illiterate, because he doesn't even know the difference between insurance, as in half a dozen insurance companies, and LIC. So he got a free ticket. He used to hop into the train at Sholapur, land up in Bombay looking for LIC policies, because he, like a simple man who wants to provide for his family, believed LIC lunga so I'm keeping my family safe. And isn't that what Sachin Tendulkar and everyone tells you all the time? Looking at the ads, he comes here, got nicely cheated by one insurance company, woke up fast enough, returned the policies in the next 2 weeks, went to Reliance Insurance. They got him half a dozen policies, because the people who sold them would have got entitled to some scooty scheme, and they say, if you buy these policies, we will let you also get a scooty. He buys them, they forge signatures. One of his wives is completely illiterate. She has a thumbprint. They even cooked up a PAN card in her name, okay? Total forgery. When a person is illiterate, you're supposed to have witnesses who read out to you and have to sign that you have understood. Witness signatures were forged. And he then discovered Jagrut Nagrik Manch, who then discovered us, came to us, and we fought for it. Now, after a long fight, and I'm naming names here because, it's a cover story. We got a 2-line response from Reliance Insurance. The bottom line is this, that with enormous pressure on IRDA, they returned us money, okay? But no compensation and no hardship allowance. I mean, he's in Sholapur. If he didn't have a free ticket, he wouldn't be coming to Bombay every other day to fight. And nothing happens to the company. Okay? This is the financial system globally that you're living in. That large companies get away. Offenses like fraud and forgery are non-bailable. If you do it to your neighbor, you're going to get into a lockup without even a bail, because these are non-bailable offenses. A company does it, a bank does it, no punishments. Okay? So none of the Reliance employees who cheated him have got away with it. The IRDA can't be bothered, and I'm telling you, even as an organization, we are just too small to be able to take that battle up. We should actually take them to court. We will eventually when we are a larger organization. But when I kept saying in the beginning that we need all of you to join, because when there are more people, it's possible for us to fight. This is an example of what happens. And when I tell you use of celebrities, okay, Sachin Tendulkar. Now we keep getting complaints on the insurance helpline of senior citizens who are persuaded to buy child plans for their child, grandchild, and whatever, and enormous promises. It sounds very good that you are the policy holder. Even if you die a couple of years later, the child gets the benefit. I mean, there's nothing that is a more saleable proposition than that. What they don't tell you is in the first 2 years, 98% of the money that you pay goes towards charges, administrative charges and other charges. And it is such an expensive proposition that instead, if you left your grandchild earmarked one of your FDs of 5 lakh or 3 lakhs to one of your grandchildren, you would be doing him a bigger favor than buying a child plan for him where you're paying and you don't know whether he'll get the benefit or not. An entire village, one smart insurance agent managed to convince an entire village 3 hours drive from Bombay to buy child plans. I don't think any of them even knows how to make a claim or will be in a position to make a claim if something really goes wrong. Then you have Amitabh Bachchan. I mean, we are all great fans, but they are not people that you should listen to when you're buying insurance. What is he telling the security people at the airport? 2 minutes? It's not Maggie noodles, for God's sake. You cannot buy insurance in 2 minutes. You cannot say, let any insurance agent come, I trust him, and I sign on it. In fact, it's the road to disaster. But this is what is being bombarded at you. I mean, the ad has stopped now, but this is exactly what he's telling you. And the flip side is that we had somebody from Goldman Sachs, friend of ours, who has 3 children, called an agent. He spent 1.5 hours with him Sunday morning. He thought it will take him 15 minutes to decide. After all, he's a finance whiz from Harvard and whatever. At the end of 1.5 hours, he was so confused with the various options. He told the guy, leave the papers and come back the next week. Okay? Now, if somebody who was a finance whiz couldn't make a decision fast, you have Amitabh Bachchan saying 2 minutes. Okay, and this is again a huge fight that we have on with IRDA and RBI, saying you can't have celebrity advertising. SEBI doesn't allow it. Okay, SEBI doesn't allow celebrities to sell IPOs or mutual funds, but SEBI is now in existence for what? It celebrated its 25th birthday, and I remember within the first 3 years after it was set up, there was a company where Madhuri Dixit was a director, and that is the time they framed guidelines and they said no celebrities will sell IPOs. And they told her, you can be a director, a stakeholder, your picture will not be on the cover of the IPO and you will not promote it to the public because the chances are they'll get misled. Now, if they could do that 22, 23 years ago, why on earth can't we not? And I'm making this presentation to the Ministry of Consumer Affairs, I've made it to ASCI, I've made it to CII, I've made it to the Ministry of Corporate Affairs. I have not been able to make a difference as yet. So, like I said, these are tough battles. Till then, you have to be careful. Another actor, we absolutely love him. He's superb, very convincing. What is he telling you? Come insurance lene ki bimari. Okay, so we did the numbers and we said, okay, so what happens? Come insurance mat lo, jada lo. We discovered that this company, which he hawks, has one of the worst track records in paying claims. Okay. No, yeah, Aegon Religare, you're right. So 45% rejections. So kam mat lo, jada lo, so that more can be rejected. And it's another reason why we say you should not have celebrities. He's really convincing, right? I mean, I listened to it the first time and I'm also convinced that, yeah, what is the point? And, this is such an important point. We met the Hindustan Lever chairperson. He's a finance director, ex-chairperson, okay, Keki Dadi Seth. And he was telling us how until he retired, he had bought an insurance policy of 1 lakh and he thought it's a lot, okay? And throughout his career, he was still on that 1 lakh policy. Of course, he earned so much more, he didn't need it, and I don't think he even needs insurance. But when somebody gives you a wake-up call and say, come insurance lene ki bimari, it sort of makes you sit up and say, yeah, he's got a point. But then look at the back end and look at the numbers, it's a completely different story. Right? So, I'm not getting into insurance in detail because we have somebody who's a real expert in insurance. We have written cover stories. I would urge you instead to write to us. Small point that I'm making, which is why I'm not going to answer questions on health insurance. Just a small point I'm making is that increasingly we are discovering that it is so expensive to get health insurance. The amount of money that you pay per year is so huge that some doctors, and really very upright doctors, are beginning to say that is it even worth your while to get health insurance, or should you create a corpus, open an FD which is compounded regularly and keep that as your FD which is meant for medical emergencies, and it might be a much cheaper option than getting health insurance and taking a chance. And in fact, when we do memorandums during the budget and things, this is something that we want to fight with the government for, where we want to say, give us a choice. Don't force us to buy insurance. Give us a choice of opening one FD which is designated as my health insurance FD or my health treatment FD, which if I break it only for a health emergency, it should be tax free. Again, it's not going to be easy convincing the government to do it, but I don't see why they should not allow one fixed deposit of up to 5 lakhs, which is tax-free and which is meant and earmarked for medical emergencies.
They talk about cashless insurance.
I know. But it's the same thing. It's how you get your money, that's all. Whether you pay upfront and collect it or whether you get it cash.
One small question. See, you say FD, create an FD. For creating an FD, I require a good sum. Whereas premium I pay every year, it comes to 10,000, 20,000, whatever it is. So how do I generate a FD for that way?
If you cover everything, the premiums are getting to be even 45,000 plus.
Yeah.
Because we have people coming and telling us that's the kind of money they're paying. And if that is the money you collect, on an average until a couple of years ago, now health costs are galloping at 130%, okay, according to an insurance company. Even if you, I'm not saying that you're going to earn enough of interest on that FD, but even if you break that FD, it's a small sum because per major illness, you're not going to spend more than 3 lakhs. So if you're sure that you're going to make a claim this year when you start paying, even that you can't because you have a 2-year waiting period usually before you can make a big claim. So you are anyway going to pay. So if you're paying 45,000, it's better to it may be better. I'm not going to make a claim that is the route. I'm saying this is one of the suggestions that people have. We have not explored it. We are not sure, but it sounds very reasonable to us that you collect money, you have 1 lakh of rupees in the corpus. Even if you blow up that whole lakh of rupees, it doesn't matter, you restart. But chances are every 2-3 years, if you have a major illness, you would have collected 2.5 lakhs. That's about what it costs. Things like critical illness and things which require bigger sums are different. You also have more of a choice about where you go and get the treatment, because you can go to a smaller place and pay it and get specialized treatment. For instance, we had someone who in our office who suffered from a kidney stone, and if we were able to get treatment locally with a very good doctor, it would have cost us 15 to 20,000. Because we went to a specialized thing and we went because we wanted cashless, we paid 75 to 80,000 for the same thing. Okay, so there are a lot of things, but like I said, I will not get into that debate. Let's have a separate one with our insurance expert because there's a lot to discuss on it. E-traps, if you use email, please remember, ignore all emails that are offering jobs and contracts, not even to your sons, grandsons, nephews, neighbors, nobody, they're all frauds. If any African dictator, Rajat Gupta, some galleon investor says that he wants to use your bank account to transfer money, it's all 100% fraud, ignore it. If it says you won a lottery, doesn't matter which name, even if it says Reserve Bank of India is giving you money, this is a big fraud that's going around using RBI name and creating documents with RBI logo. They are all frauds, and you must remember, because this is the kind of thing globally that senior citizens are most susceptible to. I mean, there are people who have gone through kya hota hai dekhte hai, let me reply and see lots of horror stories that you will keep reading in the newspapers. Don't go down that street at all. Now, identification, this is something you can't avoid, okay, because everywhere people are asking you for KYC documents, and the reason I put it up is to say that these are real stories, we're not making them up. Simple things like your passport, PAN card, what is your mother's maiden name, kind of secret questions which are not so secret, are easy for people to get. And a lot of people, women, senior citizens, usually will go and tell somebody, get me a SIM card, okay, because we feel very confused. We don't want to go ourselves and get that legwork done. So this man took 2 SIM cards, which he's not supposed to, obviously bribed the agent. He got 2 SIM cards with 1 set of documents, kept 1 card, kept making calls to this porn line, ran up a bill like this. The woman was arrested, first harassed by recovery agents, then arrested. Luckily for her, the cops believed her, and then they asked her, who got you this card in the first place? Because she kept saying that other number doesn't belong to me, and all the documents were hers. So she finally said that it was her nephew, and I think they gave him the 3rd degree, and he confessed that he had taken 2 SIM cards and kept 1 for himself. Okay, so you have this picture of him getting arrested. And believe me, now that you are going to have Aadhaar, it adds a new dimension of danger to all this nonsense, because you're putting your fingerprints and your iris prints over there, And we have been campaigning against Aadhaar. It's not passed by Parliament. We think it's illegal. The data is not safe. They've been issued in the name of a table and a chair and what have you. I'm sure you all are reading them. I don't even know what is going to happen on that front, but that just adds a new dimension to it. Don't respond. No bank ever asks you to put your password in any verification emails that they sent. Okay? Our mind creates confusion because when you want to do a banking transaction, you're asked for your details. So you put them in. But if you get an email saying, I'll shut down your account unless you re-verify or give your password, please do not answer those. Please do not answer phone calls which say we are doing a check, we want your details. Do not ever give your PIN and password on the phone. These frauds are committed by trained call center people who have actually worked with the banks, and they sound exactly like your regular call center, and they fool people. They even call up in advance to say you'll get a call in 15 minutes for verification. So it sort of again, makes your mind feel that yes, you're expecting that call. These are fake calls done twice. Okay, so don't answer any of these calls. If you get a call which says I'll close your account if you're not verifying details, keep the call center number handy. You call them back, okay? Not the person who's calling you, but the official call center, and ask them. In fact, don't even bother, because I can tell you 100% it is a fake call, because they don't make calls which say we are doing a verification on the phone and ask for your details. They're not supposed to. Only you should call the call center. It's never the other way around. Emotional traps. This again happens, like I said, when people are more trusting, want others to do it. And these are real stories, okay? Story of people who have built one house. So this is a story that was told to us by a lawyer. The son persuaded his father that we're living in a small house, I'm getting married, why don't we pool in our resources, put your money as down payment, then I'll take a loan and we move to a bigger house. Father said, okay. The new house was bought in the son's name because he was going to get the loan. And then they threw out the parents because they said the daughter-in-law can't get along with them. So he lost his house, and done by his own son, moved to the new house, and the son had no qualms about throwing him out. We say just avoid these situations. At least become a joint owner. If you're ever going to pool your existing house to get a bigger one, I know it is your son or your daughter or whoever, insist on joint ownership. It means being a little tough, but it's worth it. Do not take credit cards. A lot of people want to say that I have savings. My 20-year-old grandson is gone to study in Hyderabad, Bangalore, wherever. You're feeling very proud. He's got into IIT or he's got into IIM. You want to get him a credit card? Big mistake. You want to give him cash? Give him cash, whatever you can afford. Don't ever take a credit card for someone which you're going to pay for in your name and allow someone else to use it. If you ask me, it sounds preposterous to me, but these are real stories that have happened to people. They say, it's my grandson and he should have some spending money. Sure, his parents are going to give it to him, but I have some I can. Give him cash. Don't give him a credit card, because then you are responsible for the entire credit risk that happens. Do not stand guarantor. There is a case which we know of, again reported in the Times, where a person fought 30 years because somebody who was a neighbor, he stood guarantor for a bank account. Not even a guarantor, introducer. And that chap turned out to be some Kashmiri terrorist, and they were going after him, and this man spent 30 years going through a court case, at the end of which, he got off. But he spent most of his life fighting that case. Today, it is not required. In every case, whether it's post-dated checks or whatever, today you're no longer in an environment where you need introducers or sureties or guarantors. So please avoid it. You're living off your savings. These are risks that you should not take at all. Like I said, 80% of money even today that Indians, their savings go into creating an asset, which is the house, the primary asset. I'm sure it's true for all of us in this room. Okay, for a long time I used to say I have no other savings because all my extra income goes into paying back an EMI. That's the only thing we had. So if you have that and you don't have cash, what do? because cost of living is going up, inflation is galloping. Today you have a product called reverse mortgage which allows you to draw value from that property, and you may have something to leave for your children, but Devashish will talk about it in the next session in detail because that's an investment. Second, enhance your income. Like I said, at 60 you're young, okay? And I think the country needs you. We definitely in Moneylife could do with all the support that we can get from people who have long years of expertise. It's true, let me tell you, of everyone else. You may not be in the same salary bracket as someone who is below 50, but getting a second income in whatever your area of expertise is not difficult. Jobs are flexible, they can be done from home, people are needed. Make the effort and you can enhance income. Third, I've gone through a whole list of what could go wrong. Maybe you're careful, maybe you're not. Problems always happen. There is help available for most situations. So, for instance, there is something called Disha, which has counseling twice a week here in Moneylife. It's confidential counseling, one-to-one. There is an RBI Assistant General Manager who's the counselor, and he's excellent. So, I would really urge anyone who has issues, even understanding certain products, to take an appointment and come and meet him. I now move to a third area, okay, which is again a lifestyle related issue. Many people equate retirement homes with old age homes. Two completely different things. Old age homes tend to be for people who need help and support and do not have money. That is our understanding. Retirement communities are by and large for people. I mean, I remember when I wrote a cover story on retirement communities, I had a lovely quote from someone who said that, I retired at the age of 60, and this man worked in a multinational. And he says that I don't go to work anymore, but my wife doesn't retire. So if you stay at home, I mean, most of the time she ends up doing more work because you're at home, right? So he says, I wanted her also not to be doing any work. So we wanted to have a nice time. So we hunted and found a great retirement community, because these things are really built very well. They have, cafes, they have libraries, they're nice places, and you don't need to cook, you don't need to look after your home, you have help for everything, and it's a wonderful alternative for a lot of people that is worth considering. And it's become fashionable these days to look at retirement homes. But the reason I'm including it here is, while there are huge pluses, you have to choose them carefully. I saw a one-page article in the Times of India, I think last week, Monday, right? And it only talked about the positives and not the negatives. So I'm going to tell you a few things that you need to watch out for when you look at a retirement home. One, you have to visit the place yourself, okay? Don't go by the photographs and what you hear. You must go and look at it. Make basic choices of climate. This is so important. People don't think of it. A lot of us have a dream. I want to retire in Goa, or I want to retire in Kashmir, okay? It's nice as a dream. You go and live there, you will find that the cold doesn't suit you, or the mugginess of Goa doesn't suit you. It's great for a 10-day holiday, but not when you want to actually shift and go and live there. Third, language is important, and the older you are, the less you want to make adjustments. So I know a couple from Pune who went and bought a lovely place at Darjeeling, and in exactly 2 years they sold it and came back, sold it at a loss, because they said, we just got tired of an alien culture. You want to hear familiar voices and languages around you when you've retired, and it's a small thing but important, because all the scenic beauty doesn't make up for the fact that you want, your people around you. The third is check the amenities. One of the things that they say is, don't ever take a retirement community where you can't go and live for at least 10 days, because then you observe not just what the facilities are, but the people, because you don't want to go and live in a community where everybody feels cut off from their families and are unhappy. You want to live in a joyful environment. So if you don't get that sense, it doesn't make sense to go and live in that kind of a retirement community. So find one which has these guest facilities, which will allow you to go and pay and check it out. Otherwise, don't make up your mind. don't go too far. I mean, when you go to a retirement home, you're not being thrown out by your friends and relatives, right? So every time there is a family occasion, maybe grandson's birthday, maybe a marriage or whatever, you want to come back and participate. So don't ever say, I'm living in Bombay and I'll retire in Goa, or I'll retire in Kashmir or in Ladakh or whatever, because then you are cutting yourself out. So stick to places that are maybe an hour or two away, where you can be part of the family and be distant also, so that you have your freedom and you have your family too, right? The other advantage that you have to think about, don't go far away. I know somebody who's gone, he's an IIM graduate, he's gone to Coimbatore, very scenic. He's gone with his uncle and his father, all of them went, and he says, I'm 60 plus, you are 75, let's go and all retire there. The beginning it was wonderful. They started having all kinds of problems. Suddenly the cook vanishes from the kitchen, then the laundromat stop working. So all the high class amenities that I talked about, they start creaking. And you're stuck so far away because you've sold off everything that you have in Bombay and you've gone there. I think that's a mistake. We strongly recommend that don't, and this is something again which is going to be, as I said, the more senior citizens are going to be a force to reckon with, the government is going to listen to you. But today a lot of retirement homes expect you to buy the place, okay? And we think it's a mistake, because when you bought a place, you're reducing your choice of, exit options. You want to sell it, you want to come back, you realized you made a mistake, you can't come back because you're going to get so little for that place. So we feel you should go to something like, say, Dignity Lifestyles at Neral, which allows you to pay a 5 lakh deposit, and then you pay a rent. So you made a mistake, you get your deposit, you come back. But you must have an exit option. The last thing that you must remember about retirement communities is that the medical facilities are really important. Now, all good retirement communities have little hospices, they have hospitals, they have trained people, they have an ambulance. But if it is too far away and you don't have a multi-speciality hospital within a couple of hours driving distance, then it's a problem. So if you're looking at a retirement home, that also has to be part of your consideration. You can't go so far away from reality. In any case, this is a cover story we have written. So you have any more questions, thoughts about it, we have lots of details there that you can look at about choosing retirement homes. And like I said, there's no regulator as yet, okay? The biggest problem with retirement homes is that there's no regulator, and which means that if you make a mistake, the fight, you don't want to have that fight at the age of 70 or 75. You don't want to be spending time going to court, so it is something that you need to worry about. And I'm now into the last section, which is what do you do with all this money that you've collected and how do you leave it? These are various tools available for estate planning. Simplest is, of course, making a will, and we have special sessions on wills, so I'm not going to get into details. You can make a trust if you need to leave for people with special needs. You have maybe a child who's mentally impaired or whatever. You want to take extra care, you can create a trust. You can gift. Nominations are important. Insurance is also a part of estate planning. You buy a good insurance, it definitely helps people. Power of attorney to say what you need to do, and then HUF is a whole new ballgame, which I'm not going to discuss in the session. I'm just saying that these are options. Wills are simple, the laws are simple. You need 2 witnesses, you have to be of sound mind, and you can change it any number of times. That's why the last will and testament is important. And you can add to an existing will, you don't need to keep changing it. Just put down the details, what you own and who you want to give it to very clearly, because clarity is key in any will. Everything else can be discussed. Now, since
what happens to the inherited property? You have written there you can make will for your own, but not...
Inherited property goes by different succession laws. In fact, I'm coming to that. No, what happens here is, one of the things I would strongly urge all the men in this room, think about your wife, okay? The statistics show that women outlive men by minimum of 5 to 7 years, often more. And a lot of times the women think that, everything is owned 50-50, especially in nuclear families. And if it goes to the Succession Act, this is how it will get divided. So you will have the person who matters so much, who's helped you build what it is, running around getting signatures even from the children, and be at the mercy of the children to sign on to say that she is entitled to what she has. So make a will and make sure that you leave it to your wife first. Don't worry, she will look after the children. If it's Muslim law, it is even worse because only 1/6 goes to the wife, right? So in these situations, making a will is really important. Trusts you can make, but I think that nominations, we've ran through gifts and things, and insurance, I've already mentioned it. Gifts has changed. Earlier people used to give gifts, but now they're taxable, so they're not that attractive. So if people tell you make a gift during your lifetime, it makes sense if you don't have to pay taxes and you can just transfer it. But if you're doing it with a proper gift deed, you will have to pay tax on it. One of the things that you can remember, and which very low awareness about, is this Married Women's Property Act. If you buy an insurance under that act, it becomes like an automatic trust, okay? And the advantages of it is that it cannot be attached by any creditors. So if somebody is in a business family and has a lot of creditors, has a risk that something happens to him, people would come to claim from his family. You can protect your family by doing this. You cannot change the beneficiaries ever. You can't borrow against this insurance policy. So it has all these caveats, but it's worth doing, especially if you have a lot of outstandings and borrowings, or you're in business and you need to worry about the family. It's a regular insurance like any other. All you have to do is, at the time of buying it, you have to say that I want to buy it under the Married Women's Property Act.
Even government is apart from taking
Attaching
any tax.
So no creditors,
Income
no tax.
As far as income tax is concerned.
Yeah, no income tax enforcement. Nobody can attach that policy.
100%
Yeah. Then nominations are the simplest way in which you can protect people. One is, if you have your wife as a nominee for your flat, it becomes easier for it to, a nominee holds a asset on behalf of the person who makes the will, okay? He doesn't become the owner. And it is a will that takes precedence if there is a will. But a nominee gets control of the asset. So if it's a bank account, you have a nomination. Insurance, in any case, the nominee gets the money. But in a bank account, they get access to the funds. In a housing society, the nominee gets access to the flat. So I keep saying, avoid complications like putting your wife and your 3 children as nominees. Put the wife first. Let the flat go to her. Let her leave it to the children, children, whatever, later on. Because you're then protecting the one person that matters, and she is going to take care of the children. So it's not something to worry about. But nomination is key, because you can avoid a lot of complications of will if you have your nomination in place. But it is something that a lot of men just do not remember. This is a tragic case. Multinational executive died at the age of 45. One fine day just dropped dead with a heart attack. Had 2 teenage children, and they discovered then that his bank account had remained the same all his life. All his FDs were attached to one core bank account in Citibank, and the nomination was his brother. And they had fought with the brother 10, 12 years ago, so they had no truck, but they had never looked at nomination. And the brother came to claim the money. So his entire nest egg was attached to this several bank accounts in one bank with the brother as a nominee. So when we do seminars for women, I keep telling women, please take a look at what is happening to nominations. It can be a lifesaver. Make sure that you're looking at it. When it comes to share transmission, there is a little bit of a problem, because again, the nominee gets in Maharashtra, gets the shares. The government has made it complex. Every demat account can have only one, so you want to leave it to multiple people, you need multiple demat accounts. But again, it is worth it, because you at least ensure that there is a clear line of who gets what. Finally, the last bit I'm going to talk about is this living will, or what is called Ichhamaran, because a lot of people ask us about it. And I must tell you that it is not legal in India. Okay? The Indian government doesn't recognize it, except that if you made a living will, then when it comes to a situation where you're in hospital with a lot of tubes in you, they will take into account the fact that it was your wish that you don't want to be kept on artificial support and things like that. There are people who have been fighting about this. There is this Kulabawala, there is another doctor that we know called Suren Delia, who's even set up this Society for the Right to Die with Dignity and championing this in a big way. And but because people ask, let me tell you, it's not legal, but it's still worth doing it because it's taken into account at that time by the people around you, which is mainly the doctors. And it also makes your family less guilty if they have to make a tough decision about you. Final bit is this Maintenance and Welfare of Parents and Senior Citizens Act. This is one of the good things. I used to be very surprised when the act was passed in 2007, but I'm astonished at how many people need it. You would be really surprised when we say elder abuse. It's a serious issue in India, and very educated people, middle to affluent, are harassed like hell by people. Today you have an act that protects you. 23 states have already passed the act. Each state had to do it themselves. 12 more have framed the rules under it, and even small places like Amritsar. Amritsar has 35 rulings. I read a story in Jan where they have given compensation to parents who've been harassed. The reason to tell you all this is that I feel that most of you who come to a session like Moneylife, you're such a small minority. But if all of you are even informed that this exists, it means that when you hear of somebody in trouble, you will be able to tell them that there is an act, that it can help you. I'm sure it's not going to happen to you and your families, but you will come across friends, neighbors. For instance, I got an email from someone who says his old teacher at Prabhadevi was being harassed by her son. She was 88, suffering from dementia, and the man writes to say, I don't know what to do. I've seen her suffering for 2 years. And I said, why on earth didn't you write to us earlier? Because we can tell you helplines that you can go to. We can tell you organizations that can go and help these people. So it's at least important for you to know that these acts are there and that you can take advantage of them, or you can help others take advantage of them. Thank you very much.